Markets are at some critical levels going into next week. So in today's SMC Outlook, I have complete coverage on the DXY, the Euro, the Pound, Gold, Silver, Nasdaq, S&P 500, and Bitcoin. So we have a ton to talk about today. My name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So we have a lot to cover today because markets are at a critical spot here on the chart where I think that early next week, we could see some big moves from these markets. So let's start here with the DXY, the US dollar index, looking at the daily time frame. So as I've maintained now for really months since this change of character occurred back here, okay, what we had is in 2025, we had a downtrend, the market went sideways. We had the close below these two lows over here, giving us a break of structure. We had a change of character up here. Now, like I've said recently, even though this was very slight here for the DXY, the Euro, which makes up the majority of the weighting of the DXY, gave a close of over 50 pips below its respective low. So therefore, in my opinion, this up here is also pretty convincing for the DXY, okay? So looking here now at the 4-hour time frame. So we know that, at least for me overall, this market does look bullish. This does look like a potential macro bottom that has formed here over the past year plus, okay? So looking at the 4-hour time frame now, this is what's going to be key for next week, because really last week, we really just went sideways, okay? We did have a lot of displacement back here. We broke out of this range. However, we still have these range highs back here. And we also have this single print right here at 99.47. So a single print is a TPO term, time price opportunity. It's auction theory that basically, when you look at this on the 1-hour time frame, you can see how aggressive this push up was. So this is a thinly traded area here, the single print, and it represents an inefficient auction at that time. So markets do tend to revisit areas like this to facilitate an efficient auction. Okay, so not always, but oftentimes they do. And what you'll also notice here too on the 4-hour time frame is that this is also very close to this trend line here, okay, which could also be the bottom of this channel here. So off of this high, you can see we have this trend line intersecting right there as well, along with those previous highs. So even if this is not going to be the low for the DXY, I do expect buyers to come out and defend this area if it is tested early next week. Okay, now in terms of resistance here, obviously we have the highs back here, but then we also have, if you look at this stayed on the 4-hour time frame, moving out here, you can see where these were the highs back here that gave us that change of character we just looked at, right around 100.5. So you've got these highs up here. You've also got these highs back here as well. So you do have some resistance up here in this area. So basically support around 99.5 in that area and resistance up around 100.5. Now, one thing here too, before we move on, is that there is still a scenario where we get the DXY pushing back here into this region, okay? Because what you'll notice is that on this move up, a lot of displacement back here, we had a pullback. However, this was relatively shallow compared to this initial move. Okay, this impulsive move up, the correction was relatively shallow. So there is a scenario where we see the DXY come back here and revisit this area, this inefficiency down here. But in order for that to happen, first of all, we would have to see levels like this here next week break down. So right around, again, 99.47, this region down here, this would have to break down. And then really, you'd have to see the DXY below this low down here. So my base case right now, like I said, is for buyers to come out. If this is tested, buyers come out and defend this area here. Whether that becomes the bottom before 100.5, we'll have to wait and see. But I do think that this area down here is likely to attract a lot of buying pressure if we see it tested. Okay, so next up, let's take a look at the EURUSD. And if you guys do want to see exactly how I trade SMC full time, check out the link right here on the screen. That's going to give you a free SMC training that is 2 hours long, content that you will not find on YouTube. It's completely free, so check it out. If you don't see it here, then look at the description of this video. You're also going to find a link there to my #1 most trusted broker there as well. So if you're looking for a broker, they are a great place to trade. You can trade Forex, commodities, crypto, and also indices. All right, so the EURUSD, we saw a bounce last week from 115. So this is the area back here, the support area back here that we've talked about now for the past couple of weeks. And you can also see where on this move lower, we basically had what amounts to a double bottom. However, I don't trade double bottoms, guys. I don't trade double bottoms because most times they don't work out. Same thing with double tops. But looking here at this chart pattern, one thing that is interesting is very similar to the DXY. You can see we have a single print up here at 116.06. So same rules apply here for this single print as what I just mentioned on the DXY. It's a thinly traded area where we could see the euro revisit this region next week. Now, what's also interesting about this is that you can see we have the bottom of this channel as well. So this right here, we saw the breakdown back here, we saw the retest here, and then we have this single print up here in this area. So this is going to be a confluence of resistance for the euro. Now, this is going to be key for all of the markets I talk about in today's video, because if the euro gets up here, okay, let's talk about this here for a second, because if the euro gets up here, let's look at a 15-minute time frame. What's going to be key next week is to confirm that this is going to be a top, is you want to see the market push up here, give you a BOS above these highs, okay? And then pull back and then do the same thing here. Okay, now it doesn't have to be exactly like this, but the point is you want to see the market give you a BOS and then give you a change of character. Okay, and then you're shorting, or I'm shorting, the lower high that develops. So very similar to, like, if we look at the daily time frame here, right? So very similar to how we identified, or how I identified, that this up here looked bearish on the daily. So you can see in 2025, we had higher highs and higher lows, right? And so the same rules apply here when you're looking at this BOS and this first change of character since 2024. This was a bearish change of character for the euro. And the same exact rules apply here on the daily time frame as they do to even a 15-minute time frame. It's the same exact concept over and over again. So going back to the 15-minute time frame, it would have to be something like this here, right? Where you get the push up, the new BOS, you get a pullback, BOS, and then the change of character, okay? So that's what I'd have to see to confirm this. And this goes for any market that we talk about in today's video, and really ever. And when you're looking for that lower time frame confirmation, this is exactly what you want to see, okay? So it's not just a matter of, shorting up here on the euro around 116 and hoping for the best. Although I know that's what a lot of traders do, and it's also why, in my opinion, a lot of traders do fail. You got to wait for that confirmation on the low time frames to really confirm that this area up here is going to hold and that we are likely to get a lower high developing, okay? Because in the absence of that, if the euro were to just continue to grind higher here, higher highs and higher lows, and close back in this channel, then there is a case where we come back up here toward these highs, right? And then this becomes a more significant low. So you've got to have that confirmation around 116. But the bottom line is this area, in my opinion, likely attracts price next week. It's also going to be resistance for the euro. And then in the context of this larger descending channel, you can see this here, right? We've got, ever since back here in January, we have this high up here. We've got this high, this one here, and these lows. Okay, so this right here is going to be the area to watch, 116. You've got the protected high up here just below 117, and then you've got the top of this channel up here as well. So I am only looking for shorts here. There's nothing on the euro chart right now that has me bullish. I just want to be clear about this. I mean, even this trend right here, lower highs and lower lows, right? If we were to get something bullish, then I would change with it. But right now I'm looking for shorts only. Okay, so let's move along to the pound here, GBPUSD, which is not as interesting in my opinion as the euro. And you can see that on the daily time frame, this has been a lot of just choppy, price action back and forth now for months. And on the 4-hour time frame, what you'll notice here is that I have these labeled as I BOS and I change of character. So I break of structure, that means internal break of structure. This is an internal change of character, internal break of structure. Okay, so the key here, guys, is if we look at the hourly time frame, because you'll notice that this back here is just a wick on the 4-hour, but what you'll notice on the 1-hour time frame is that this is all just internal structure. Okay, so really, when you look at the 4-hour, like I said in the last video, the more interesting play here for the pound would be if we were to get follow through down here, okay, below here. Then you have a new BOS below here, and you're targeting some of these lows, okay, and possibly even lower. So right now, when you look at this here, I mean, it's just been ever since really this drop. In fact, this drop back here since May 14th, it has been a completely sideways market, okay? So not a whole lot to do here in my opinion, all right? So don't get confused by this. Again, this is internal to this high up here and this low down here. All right, so I don't like the pound as much as the euro. I did want to talk about it though, because I know people do like hearing my thoughts on it. So for now, guys, it is a very, very sideways market. I don't like this as much as something like the euro, okay? Looking at gold now. So we do have the market pushing on the bottom of this channel here that I talked about last week. So one thing that I mentioned last week is that if you look here on the daily time frame, first of all, we have this descending channel here, okay? So off of the highs. We've got highs back here. We've got lows down here. Now, at the moment, we have this downtrend, and we have now swept this low back here. So the one question that I've had, okay, is do we see this low right here give us a local bottom, come up here towards some of these inefficiencies, right, before continuing lower? And so far, the jury is out on that because the one area that I mentioned last week that would have to give out is going to be the bottom of this channel. And you can see where so far on Friday, the market is finding some resistance here, right? Sellers are coming out and defending this area. You can see we've got all these lows back here. We did see a breakdown last week. And again, so far, resistance. Now, if you were looking for shorts here, okay, I want to be clear with this because just like I mentioned with the euro, if you are looking for shorts, right, what you have to see up here is you'd have to see some type of change of character, okay, a bearish change of character. In other words, you'd have to see the market do this, right, and then give you that close below, okay? And so far, we haven't had that because we had this high back here. This is all one price leg. And then all of this here is just internal, okay? So there is nothing, in my opinion, here to signal there's a short, okay? So even though this could hold up, going to next week and we could get a lower high, right now, in my opinion, there's nothing here to confirm a short setup, okay? At the same time, though, when you look at this here, there's also nothing to confirm a bottom because right now what you have is you have a series of lower highs and lower lows, okay? So for me, like I said last week, what would have to happen here for gold, and this sounds extreme, but it's only because this recent price leg has been so aggressive, is really this level back here, 45.95, this high right up here, this is the current protected high. This I am not treating as a new protected high simply because in my opinion, all of this is one price leg, okay? And you can see that here that this retrace right here was much more substantial than this, okay? And that's why I'm using this up here as the protected high. So bottom line is, as long as gold is below 45.95, I am staying bearish on gold. However, like I said too, there really is no confirmation of a short just yet, okay? Now, one level, if we do see lower for gold next week, one level to keep an eye on is going to be 38.95. So you can see that back here in 2025, we had the highs back here, we had the breakout, and then we had the retest. So this is going to be a critical level for gold to where if we do see lower prices, then this is going to be a support level to watch, okay? Now, I've also got this area around 34.35 marked, and that's simply because if you look back here on the daily, this was the breakout that we saw back here in 2025. We saw gold go sideways for months back here, give us this ascending triangle pattern, and then we had the breakout. Now, what is interesting about this is that this breakout was very, very aggressive, okay? A lot of displacement back here, a lot of inefficiencies that built up. So if we were to see, as a hypothetical, if we were to see gold give us a lower high, whether it be here, okay, or higher up, if we were to get a lower high here and this trend here continues lower, then this down here is going to be, in my opinion, the one to watch in July. Nothing says that we will get down there. I'm not forecasting, I'm not predicting, but if we were to see that, then this would be a massive level here for gold, right around 34.35. This would be the one to watch, in my opinion, sometime in July if we get down there. Okay, so I remain bearish on gold. There's nothing here on this chart to suggest that a bottom is in. Obviously, if that were to change, then I will change with the market. But right now, I am looking for a lower high to develop. Again, whether that be here or somewhere up here, you see this inefficiency back here in this area. We'll have to wait and see, but I'm looking for that lower time frame confirmation before I try to short gold. Okay, so moving on to silver. Now, this chart, I do want to say this chart is not as clean as gold. Okay, I don't really like this one nearly as much. And it has been sideways. So in the case of gold, you can see we have had a nice pullback within this channel. And then you move over here to silver and you don't really have as much symmetry in this market, okay? Now, a couple things here. First of all, you can see where we are bouncing from the low right back here, okay? So I think that trying to short silver down here is a mistake. I said the same thing on gold this past week, that trying to short the lows. I mean, you look at this, right? Where do you want to short a market? And it's not down here, okay? Same thing back here. So for silver right now, we've got this inefficiency back here in this area, okay? This candle right here. This is an inefficiency, and we also have an inefficiency back here as well above these highs. So look, there is a case if the US dollar were to pull back more, because that is going to be a factor here. If the US dollar were to pull back more into that inefficiency we talked about, that's lower, then there is a case where we see silver move up here and possibly even sweep these highs. But regardless, guys, the key here is going to be structure. And so for that, we go to a 1 hour time frame. So back here, you can see that all of this, in my opinion, is still kind of internal. Just like with gold, this is kind of internal, right? So you can see this is that inefficiency back here that I would keep an eye on. Now, a lot of people are going to look at this and say, well, this is an inverse head and shoulders forming. And it could be. Look, it could be. But first of all, it hasn't confirmed yet. Second, inverse head and shoulders and a head and shoulders period they do tend to fail. And that's especially true in a sideways market like this, which it has been. And also with, again, all the headlines that are out there between Trump and Iran and everything in the Middle East. So keep that in mind as well. But the key takeaway here, though, is regardless of where silver tops out, whether it be up here in this area or higher up, what you need to see now that we have these higher highs and higher lows forming is you have to see the market give you a bearish change of character on a lower time frame. If you're going to trade SMC, if you're going to trade structure, then you have to wait for that. Because until then, this is just a relief rally, okay? So you don't want to just try to blindly short up here, hope for the best, or blindly short up here and hope for the best. You've got to wait for the market to give you the signal that it's likely to pull back, okay? And that would be, again, BOS, change of character. Simple as that. Okay, so until that time, this is just a relief rally. And in my opinion, not a great time to be shorting until we get some kind of signal. Okay, now before we move on to the Nasdaq, I do want to show you, I'm going to go to a 12-month chart. And that's going to sound crazy because every single candle is 1 year. However, look at this level back here around $48. So this level goes back to 1980, okay? 1980 and 2011 tested this level here. Now, we've seen a 12-month close. Again, this is 1 year, okay? This is last year. And right now, you can see what we're forming here. We're kind of pulling back potentially into this level. So the most obvious level on silver, and really between silver and gold, this is the most obvious level, is going to be down here around 48. Now, nothing says that we have to come back here and test this. But when you look at this here, right, this high up here, again, 1980, we saw this massive, massive pullback, 80s, 90s, early 2000s, tested this again. We then had a higher low. Okay, now for those of you who trade patterns, you'll also notice this as a potential cup and handle pattern. Okay, because we had the breakout back here. Okay, so uptrend back here. We had this right here as the cup, and then this over here as the handle. So this could potentially point to higher levels, although I would argue on a dollar basis, we've already seen that. Because even though this doesn't look like a lot, I mean, this was over $100 up here. This is 48, okay? So I mean, really, this could have already played out. But I think as far as where we go over the coming weeks and months, this area around 48, if we see a test here, that is going to be a massive, massive test for silver. Okay, and look, this could line up. This area down here could line up around 48, maybe $50. Could line up with gold testing this area down here around 3,400 as well. Okay, so just keep that in mind as we move forward when you're looking at gold and silver. All right, so the Nasdaq here, I talked about this a couple times last week, and the key takeaway here for this market is going to be, okay, we got the close below this low right over here at 28,557. Now, in terms of this rally that we saw, okay, so let's look at this here. This was obviously a very aggressive rally that we saw from the Nasdaq, from indices. We had the highs back here. We saw the breakout, a lot of displacement back here. The market never looked back. Okay, so this right here, this pullback was the most that we had, the most pullback that we've had apart from what we saw over here. So when you're talking about structure, right, if we look at this on the 4-hour time frame, it's pretty clear to me that this over here, we had a nice pullback here. We even swept this low back here for a little bit added confirmation. We had the BOS above, and then guess what we did last week? We closed below. So that gave us a bearish change of character. And this is why I'm saying, in my opinion, okay, I think that this move up here could be a trap. We could be trapping buyers here. Now, there's no confirmation of that. There's also no guarantee of that. But we do have a single print here at 29,923. We also have the bottom of this channel. Okay, so notice how all the highs back here, all the highs up here. We have this level through here. We've got the lows, we got the low, we had the retest. Okay, so that's what I'm watching for next week. This area up here around 30K. Now, like everything, okay, I do want to reiterate this once again, that like everything, if we get up here early next week, and I don't think we're going to have to wait long for this if we do see this tested, but if we do see the Nasdaq get up here, then what you're looking for are higher highs and higher lows, and then you're looking for a change of character. Okay, so BOS, change of character, shorting the lower high. Okay, so it's the same thing every single time. You want to wait for confirmation up here in this area, whether that be on the 1 hour time frame, 15-minute, whatever fits your style of trading. Okay, but I do think this area up here around 30K is open for business next week simply because we have that single print up there. You'll also notice that this move here, okay, very aggressive. We had this high, however, we still have this inefficiency back here. Okay, so this is likely to pull the stock market higher next week. But then from there, we're going to have to wait for that confirmation. And this is especially true when you look at the headlines right now with Trump and Iran and everything else that's going on. Which, look, is this going to be the time that we finally reach a peace deal? Who knows, right? I'm not here to forecast. I don't even use fundamentals. I use the chart only. And for me right now, 30K, this region up here is where I'm looking for confirmation for a short. But like I said on Friday, if we see the market just give us higher highs and higher lows up here into this level and we never get a change of character, then that's your cue that we're likely to just rip higher above this high. Okay. So that is what I'm looking for on the Nasdaq. As far as targets go, if we do get it, there's really no need to FOMO because you look at this here, even if we were to just pull back to these highs, which again, I'm not forecasting that we will, but if we did, you're looking at 26K. Okay. The real estate between this area up here and 26K, obviously you can see it's a long way down. Okay. So there's no need to FOMO here. Really, in my opinion, the best thing to do is to just wait for that confirmation. Okay, don't forecast, just wait for the trade to set up, wait for the chart to tell you what's happening and then go from there. Okay, and that's always the best course of action when you are trading. Now, the S&P 500, very similar, right? Very similar structure here. We had the bearish change of character last week, and you can also see where we have the bottom of this channel as well. Okay, so we've got the highs up here, we've got the lows down here, you've got two single prints, one at 74.90, the other at 75.30. Now, furthermore too, on this drop, what you'll notice since we have this change of character, and this now is our external high, external low down here, what we can do is we can draw our fibs. Okay, so modified fib here showing premium, discount, and OTE. This is optimal trade entry, this dark area. This is where, once you get a change of character like this is where a market is likely to reverse. Okay, it doesn't have to, but this is typically where you get a market showing signs of a reversal. And what you'll notice is that we've got those two single prints right here in OTE. Okay, so really the perfect area here to watch, in my opinion, on the S&P 500. You've got this displacement down here to mitigate this area around like 7,500 all the way up to about 7,540. Okay. So that's what I'm watching on the S&P, and just like the Nasdaq too. I mean, if we do get the setup, which, I mean, who knows if we will, even if you're just targeting these highs back here, right? Even if you're targeting this high right back here, okay, then the real estate here to trade is substantial. Okay. If you're able to get short anywhere through this area, stop loss above, and this is your target, then obviously you can see it's a really nice risk reward. Now, I get what people think when they hear this. They think about shorting stocks and they think, are you crazy? But the thing you have to understand is that structure is structure, right? Yes, the momentum lately has been higher, but this also, in my opinion, is a pretty convincing change of character, okay? And this right here is, again, like I said, the perfect area to watch for confirmation for a short, okay? It doesn't mean that we get it, but if we do, then I will be looking for shorts. Okay, so let's wrap up now with Bitcoin BTC. Okay, so weekly time frame, we've talked about this a few times, but basically this area down here around 44K, we've got this inefficiency back here in 2024. We had the displacement out of this range, and we did mitigate some of this. However, we still have an inefficiency down here in this region. Now, furthermore too, if you look at this on the daily chart, and again, stuff like this, guys, there's no guarantee in trading, but if you look at this move, okay, this is what looks like a flagpole. This right here is the flag. The market went sideways. Okay, and then if we measure the same distance from this high down here to this low, this is the dotted line. If we take that same distance and measure from this high up here, you get this right here around mid 40K, okay? So that right there could be a coincidence. In my opinion though, it's worth paying attention to. Now, full transparency, guys, I do have a short on from above 80K up here in this area. I did announce that in real time in Discord. So that's one of the benefits of being in Discord is that I do announce my trades in real time. And going into next week, what I think that we could see here from BTC is if we look at this on the weekly, the reason I have this area around 66K marked off is because on the weekly, you'll see all these lows and closing prices back here. Okay, so there is a lot of action here right around 66K for Bitcoin to where this is going to be critical resistance. Now, nothing says that we have to reverse from here, but if we were to get a move up here, first of all, let's take a look at this symmetry here off the lows and highs. You can see where we've got these lows back here and we've got these highs. Now, this level comes in up here around 66K as well. So just like with all these other markets, instead of just blindly shorting up here, what you want to do is wait for confirmation. So looking at something like the 1 hour time frame, what that would look like is you can see the price action recently, right? This is actually ideal. It looks messy, but what you want to see is you want to see push up, pull back, push up, pull back, push up. So what you get next week potentially is we get Bitcoin moving up here into 66K. So if we do get this, then, and this applies, again, this applies to every single market out there, guys. This is not just Bitcoin. So you get the push up, close above here, pull back, close above here, pull back, close above here. And then what you're looking for, okay, if this is going to set up, again, I'm not forecasting, is BOS above, change of character here, shorting the lower high, okay? You want to wait for this confirmation because without this, in the absence of this, I mean, it is crypto, so you've got to be careful, right? Because we could just see Bitcoin come up here, form higher highs and higher lows, and take out this area back here, okay? And so in the absence of a change of character up here, again, we could just see the market blow right through this. So you've got to be careful with that. All right, so confirmation is going to be critical, and that goes for any of these markets. Because you also got to see here too, that on Bitcoin, we do have inefficiencies up here in this region to where if we were to blow through this 66K area, we do have those inefficiencies up around 70K. But for now, I do think just looking at the weekly time frame, this is going to be a huge, huge test for BTC and the rest of the crypto market, okay? Right up here in this area. So definitely watch that one next week if we do see a retest, really because when you look at this, this goes from essentially February all the way over here to March, okay, at the end of March. So really it's 2 months worth of price action that built up here on the weekly time frame. And that is something that is likely to attract sellers if we do see it tested, okay? So right around here, around 66K. All right, guys, that's it for today's video. Keep it locked in here. Subscribe to the channel if you found this helpful. And don't forget to leave your comment below. Have a wonderful weekend, and I will talk to you again on Monday.